I am Dr. Vijaya. Today we are going to see unit number 17, Consumer Finance, Credit Card and Debit Card. This is from Block 4, Fund-Based Services. We're starting the topic. Consumer finance means a consumer loan is a loan given to consumers to finance specific types of expenditures. In other words, a consumer loan is any type of loan made to a consumer by a creditor. The loan can be secured or unsecured. Consumer finance is not rampant in India because banks lend to customers for productive purposes and not for consumptive purposes. It was, however, after the advent of social control over banks in India in 1968 that many banks in the country began to give consumer loans to customers to purchase consumer durables to improve their standard of living. Now we will see the meaning and definition of consumer finance. Consumer finance is a form of lending that provides credit to a customer for personal or household use. Consumer loan is a type of credit provided to a customer to help them finance only a set of specific expenditures. The term consumer financing is when a business or retailer offers customer financing options to its customers using either their own funds or the funds of a lending company or bank. The term consumer financing is when a business or retailer offers customer financing options to its customers using either their own funds or the funds of a lending company or a bank. In short, the consumer financing covers all the point of sale finance, including credit cards and installment loans. Businesses of all sizes benefit greatly from offering consumer financing. It is also referred as customer financing. Next, we will move on to the types of consumer finance. Mortgages. Mortgages are typically linked to buying a new house. Banks give this type based on the credit score and the ability of down payment which a borrower has to facilitate buying a new home. Credit cards. This is the most widely used in popular consumer loan. A credit card helps borrowers purchase their daily needs starting from apparel to groceries, etc. through a credit card line granted to them by the credit card company. However, the interest charges are a bit high in this case, and failing to pay attracts a high level of interest. Auto loans. Loans are typically meant for buying vehicles. These loans are generally available at the bank or the car dealership itself. Educational loan. Education loans are targeted to fulfill the education needs of students in terms of paying their college or tuition fees. It helps students pursue their education and the loan repayment starts when they have graduated from college. Refinance loans. A refinance the loan, as the name suggests, used to refinance an already existing loan. For example, one can use it to refi their car loans, educational loans, house loans and even credit cards. A refinance loan ideally has a fixed payment at a lower interest rate, which helps the borrower to close the loan earlier. Home equity loans. This is a kind of consumer loan where one can utilize the equity value of one's home to borrow money. Typically, this is needed for making improvements to the houses. Personal loans. Personal loans cater to all the buyer's daily needs and can work in a wide variety of purchases. Personal loans allow the borrower to do anything from repairs to business investments. Next, we will see the uses of consumer finance. Refinance a current loan outstanding, pursue education and thus help in the payment of tuition fees, buying a car for private or commercial use, building a house or going for improvement or repairs, aim to purchase daily needs like grocery or clothing. Next, we will see the benefits of consumer finance. Easy access to find whenever the need arises and in times of critical requirement. It offers to enhance financial flexibility ranging from various types of loans. It offers decent interest rates and is versatile. They are good when it comes to debt consolidation. One can borrow the amount one requests and the loan approval is quick. Next, we will see the features of consumer finance. Number 1, acquisition of durable. It is a method of financing for acquiring durable and semi-durable assets. Individual financing. Under consumer credit scheme, finance is provided to individual or to joint individuals. Immediate possession. Consumer get possession of assets immediately when a fraction of price is paid. Payment in installments. Under consumer credit scheme, assets prices is paid through number of installments. Short or medium term finance. Duration of finance normally ranges between 3 months to 5 years. Agreement. When there are only two parties to the contract, it is called biparties agreement, which comprises of customer and the dealer. And when there are three parties, such agreement is called tri-party agreement, which consists of the customer, the dealer and the financier. Multiple structure. The structure of financing may by way of hire purchase, conditional sale or credit sale. Down payment. It involves down payment normally ranging from 20 to 25% of assets price. Next, we will see the types of consumer credit. Revolving credit. It is an ongoing credit arrangement and it is similar to overdraft facility. Here, the credit limit will be sanctioned to the customer and the customer can avail credit to the extent of that limit. Example, you can have credit card. Cash loan. The buyer consumer gets ready cash from banks and financial institutions. Secured credit. In this form, the financier advances money on the security of appropriate collateral. Next, unsecured credit. When financier advances fund without any security, such advance is called unsecured credit, but it is allowed only to reputed customers. Fixed credit. In this form, finance is made available to customers term loan for fixed period, say for about 1 year or 5 years and so on. Next, we will see what are the major prongs of the consumer credit. Compulsory saving. It promotes compulsory saving habit among the people. To make periodical installments knowingly or unknowingly, people cut short their expenses and save. Convenience. Considering nature and types of consumers, credit facility offers scheme to the convenience to the customers. Emergencies. Consumer credit is also available to meet personal arrangement requirements like family requirements, festival, marriage, etc. Assist to meet target. When the dealer themselves arrange credit facility to the consumers, more and more customers will be attracted so that sales target can be achieved easily. Assist to make dreams to reality. Consumer credit facilitates an opportunity to possess and own those dreams on convenient terms. Enhances living standard. Consumer credit enhances living standard of people by providing latest articles and amenities at reasonable and affordable terms. Accelerates industrial investments. Increasing demand for consumer durables results into flow of more investments in rated industry. Economies of large scale production. More demand leads to more production, which then leads to large scale operation and which thus leads to price education for consumers. Economic development and natural importance. Above said factors will promote employment opportunities, national income and economic balance of a country, etc. Now we will see the disadvantages of consumer credit. It promotes blind buying. Facility to purchase at somebody else's money tempts people to buy blindly and unnecessary articles. Leads to insolvency. Blind buying of goods makes these people insolvent, bankrupt within a short span of time. It is costlier. Along with the convenience that it offers, it charges the consumers for all these convenience offered. Thus, it becomes costlier. Artificial boom. The economic development posed by the impact of customer credit is not real but artificial. Bank debt risk. By whatever name it is called credit, it always have inherent credit risk. Default is a major threat of consumer credit. Economic instability. Artificial boom and depression leads to economic instability and causes chaos in economic progress. And now we will see a new topic called credit card. A credit card is a small plastic card issued to users as a system of payment, and it allows the holder to buy goods, services based on the holder's promise to pay for these goods and services. Credit card is a suitable alternative for cash payment or credit payment or deferred payment. It is used to execute those transactions which are compiled through electronic devices like a card swiping machine, computer with internet facility, etc. Credit card is a laminated plastic card issued by a bank or non-banking financial company, that is NBFC, to give its card holder a preference to borrow funds on a short-term basis. Interest is imposed for lending short-term finance to the card holder. This interest is generally charged either after a month or 30 to 45 days later. Once credit card transactions have occurred, the card limit is pre-communicated in written correspondence with the card holder. Next, we will see the features of credit cards. Alternative to cash. Credit card is a better alternative to cash. It improves the worry of carrying various currency denominations to pay at the trade counters. It is quite easy and way fast to use a credit card rather than waiting for completion of cash transactions. Credit limit. The credit card holder enjoys the facility of a credit limit set on his card. This limit of card is determined by the credit card issuing entity only after analyzing the credit worthiness of the card holder. The credit card is of two types, that is, only one is normal credit card and another one is revolving credit card. The normal credit card is usually a credit card given by the bank at the time of issuing a credit card. Revolving credit card limit varies with the financial exposure of the credit card holder. Aids payment in domestic and foreign currency. Credit card aids in card holder to make payments in any currency of choice. In other words, it gives its holder a unique facility to make payments either in domestic, native currency, or if necessary also in foreign currency, that too as and when required. Record keeping of all the transactions. Credit card issuing entities like banks or NBFCs keeps a complete record of all the transactions made by their credit card holders. Such a record helps these entities to raise appropriate billing amounts payable by their card holders either on a monthly or some periodic basis. Regular charges. The regular charges are basic routine charges charged by the credit card issuing entity on the usage of credit card by its card holder. These charges are nominal in future. The regular charges are primarily classified into two types. One is annual charges and additional charges. Annual charges are collected on per annum or yearly basis. Additional charges are collected for other supplementary services provided by the credit card issuing entity. Such services include add-on card, that is on additional credit card, issuing of a new credit card, etc. Grace period. The grace period is referred to those minimum numbers of additional days within which a credit card holder has to pay his credit card bill without any incurring interest or financial charges. Higher fees on cash withdrawals. Credit card issuer makes charges on cash withdrawals made through credit card at the ATM outlets and other desks. Generally, cash withdrawal fees are quite higher than fees charged by the bank or NBFC for the other regular credit card transactions. On cash withdrawn done through a credit card, interest is charged on the same day. That is, interest is charged since the day on which the cash is withdrawn. Usually, no grace period is provided for cash transaction. Additional charges for delay in payment. The credit card payment is supposed to be made within a due date as mentioned on the bill of a credit card. If the payment is not paid on time, Then a credit card issuer charges some additional costs which are resulted due to delay in payment. These charges are charged to compensate the interest cost, the administration cost, and any other related cost borne by the credit card issuing entity. Next, service tax. Service tax is included in the total amount charged to the credit card holder. This mandatory service tax imposed by the government also increases the final end cost borne by the credit card holder. Many credit card providers have policies of reserving the service tax charged on the purchase of gas, fuel, and other similar goods. Bonus points. The competition among the credit card providers is unbending, that is adamant. Offering various incentives is usually a trendy, that is fashionable way to improve the sale of products in the ordinary course of business. Following this trend, credit card providers also gives bonus points on the financial value of the transactions compiled by their customers. Gifts and other offers. At a later stage, accumulated bonus points are redeemed either by converting them into gifts, cashback offers, or any other similar compelling offers. To collect many bonus points, the credit card holder has to carry out a considerable number of transactions through his credit card. And now we will see the types of credit cards. We will have many kinds of credit cards. We will see some features, some of the credit cards in the following lecture. Types of credit cards. Credit cards nowhere of various types with the different fees, interest rates, and rewarding programs. When applying for a credit card, it is important to learn to their diverse types to know the one best suited to their lifestyle and financial status. Different types of credit cards available by banks and other companies or organizations are briefly described below. Standard credit card. This is the most commonly used one. This is allowed to use money to up to a certain limit. The account holder has to put the amount once the level of balance goes down, and outstanding balance gets a penalty charge. Premium credit card. This has a much higher bank account and fees. Incentives are offered in this over and above that in a standard card. Credit card holders are offered travel incentives, reward points, cashback, and other rewards on the use of this card. This is also called the reward credit card. Some examples are airlines frequent flyer credit card, cashback credit card, automobile manufacturers reward credit card, platinum and gold, MasterCard and Visa card fall all in these two categories. Secured credit card. Next, people without credit history or without tarnished credit can avail this card. A security deposit is required amounting to the same as a credit limit. Revolving balance is required according to the buying and selling done. The next, we move on to the limited purpose credit card. There is a limitation to its use and is to be used only for particular applications. This is used for establishing small credit cards such as gas cards and credit rate departmental stores. In this, minimum charges are levied. Charge credit card. This requires the credit card holder to make full payment of the balance every month, and therefore there is no limit to credit. Because of the spending flexibility, the credit card holder is expected to have a higher income level and high credit score. Penalty is incurred if full payment of the balance is not done in time. Next, specialty credit card. This card is used for business purposes, enabling a businessman to keep their business transactions separately in a convenient way. Charge cards and standard cards are available for this. Also, students enrolled in an accredited 4-year college or university course can avail this card. Prepaid credit card. Here, money is loaded by the card holder onto the card. It is like a debit card except that is not tied up with a bank account. Now, we will see the major advantages of credit card. Easy access to credit. The biggest advantage of a credit card is to easy access to credit. Credit cards function on a deferred payment basis, which means you get to use your card now and pay for purchase later. The money used does not go out of your account, thus not denying your bank balance every time you swipe. Building a line of credit. Credit card offers you the chance to build up a line of credit. This is very important as it allows banks to view an active credit history based on your card repayments and card usage. Banks and financial institutions often look to credit card usage as a way to gauge a potential loan applicant's credit worthiness, making your credit card important for future loans or rental applications. EMI facility. If you plan on making a large purchase and don't want to sink your savings into it, you can choose to put in on your credit card as a way to defer payment. In addition to this, you can also choose to pay off your purchase in equated monthly installments, ensuring you're not paying a lump sum for it and denoting your bank balance. Paying through EMI is cheaper than taking out a personal loan to pay for a purchase such as a television or an expensive refrigerator. Incentives and offers. Most credit cards come with some packed offers and incentives to use your card. These range from cashback to reward points accumulation each time you swipe your card, which can later be redeemed as air miles or used towards paying your outstanding card dues. Lenders also offer discounts on purchase made through a credit card, such as on flight tickets, holidays, or large purchases, helping you save. Next, flexible cards. Credit cards come with an interest free period, which is a period of time during which your outstanding credit is not charged interest. Ranging between 45 to 60 days, you can avail free short term credit if you pay off the entire balance due by your credit card till payment date. Thus, you can benefit from a credit advance without having to pay the charges associated with having an outstanding balance on your credit card. Record of expenses. A credit card records each purchase made through the card with a detailed list sent with your monthly credit card statement. This can be used to determine and track your spending and purchases, which could be useful when chalking out a budget or for tax purposes. Lenders also provide instant alerts each time you swipe your card, detailing the amount of credit still available as well as the current outstanding on your card. Next, purchase protection. Credit cards offer additional protection in the form of insurance for card purchases that might be lost, damaged, or stolen. The credit card statement can be used to vouch for the veracity of the claim if you wish to file one. Now, we will see the cons of the credit cards or the disadvantages of credit cards. First, minimum due trap. The biggest con of a credit card is the minimum due amount that is displayed at the top of a bill statement. A number of credit card holders are deceived into thinking the minimum amount is the total due they are obliged to pay, when in fact it is the last or the least amount that the company expects you to pay to continue receiving card facilities. This results in customers assuming their bill is low and spending even more, acquiring interest on their outstanding, which could build up to a large and unmanageable sum over time. Hidden cost. Credit card appears to be simple and straightforward at the outset, but have a number of hidden charges that could rack up the expenses overall. Credit cards have a number of taxes and fees, such as late payment fees, joining fees, renewal fees, and processing fees. Missing a credit card could result in a penalty, and repeated late payments could even result in the reduction of your credit limit, which could have a negative impact on your credit score and future credit prospects. Easy to overuse. With revolving credit card, since your bank balance stays the same, it might be tempting to put all your purchase on your card, making you unaware of how much you owe. This could lead to you overspending and owing more than you can payback, beginning the circle of or begin the cycle of debt and higher interest rates on your future payments. Higher interest rate. If you do not clear your dues by your billing due date, the amount is carried forward and interest is charged on it. The interest is acquired over a period of time on purchases that are made after the interest free period. Credit card interest rates are quite high, with the average rate being 3% per month, which would amount to 36% per annum. Credit card fraud. Though not very common, these are chances you might be victim of credit card fraud. With advances in technology, it is possible to clone a card and gain access to confidential information through which another individual or entity can make purchases on your card. Check your statements carefully for purchases that look suspicious and inform the bank immediately if you suspect card fraud. Banks usually waive off charges if the fraud is proven, so you will not have to pay for purchases charged by the thief. Next, we will see disadvantages of the credit cards again. In a recap, you may become an impulsive buyer and tend to overspend because of the ease of using credit cards. Cards can encourage the purchase of goods and services you cannot really afford. Credit cards are alternatively expensive way of obtaining credit, and if you don't use them carefully, especially because of the high interest rates and other costs. Lost or stolen cards may result in some unwanted expenses and inconvenience. The use of a large number of credit cards can get you even further into debt. Using a credit card, especially remotely, introduce the element of risk as a card details may fall into the wrong hands, resulting in fraudulent purchases on the card. Fraudulent or unauthorized charges may take months to dispute, investigate, and resolve. Next, we will see a new topic called debit card. We all are using this debit card, so everyone will know about these cards. So we will see about this card. Debit card is a small plastic card that can be used as a method of payment, the money being taken from your bank automatically. A debit card, that is also known as a bank card, plastic card, or a check card, is a payment card that can be used in a place of cash to make purchases. It is a card like a credit card by which money may be withdrawn or the cost of purchases paid directly from the holder's bank account without the payment of interest. Now we will see the types of credit cards. We will see the types of debit cards. Visa debit card. One of the most popular debit cards in India is Visa card. Visa card offers the verified by Visa platform for enhanced security during online transactions. MasterCard debit card. Accepted at millions of merchant locations worldwide, MasterCard is one of the most popular cards along with Visa. Their debit cards are rich in features and offer excellent benefits. So, new debit cards from MasterCards are no longer available, although existing card holders continue using their cards as before. Next, RuPay debit card. Launched by National Payments Corporation of India, that is NPCI, RuPay is a first of its kind domestic payment network. The card is more flexible than its competitors. Next, contactless debit cards. Contactless debit cards. This card uses near field technology, that is NFC, which helps you to transact more safely and securely. To make a payment, all you need to do is tap or wave your card at a merchant's payment terminal. Next, Visa Electron Debit Card. Visa Electron Debit Cards are similar to Visa debit cards and can be used for transactions. The only difference being that they do not offer an overdraft facility. Mastro Debit Card. Owned by MasterCard, Mastro is a popular debit card used worldwide. Mastro keeps your money safe at all times with its state-of-the-art technology. Now we will see what are the pros of debit card, that is advantages of debit card. Debit card can be easily obtained. When you open a savings or current account, most banks issue a free debit card. Make sure that you will fill the necessary documentation to receive your debit card. Very convenient to use. One of the advantages of debit card is that it can be swiped for transaction as well as withdrawal of cash from ATMs. No more debts. When you have a credit card, you are more likely to make impulsive purchases. But a debit card keeps you in check as it is linked to your bank account. You are the only one to spend the amount that is in your account. You don't have to worry about the mounting credit bills anymore. Easily accepted. Debit cards are accepted widely all over India and at international destinations. Make sure to authorize international transactions by simply calling your bank. These debit cards can be used for cash withdrawal at international ATMs too. So, you don't have to carry cash with you when you are traveling. Earn rewards. Offers are not restricted to credit cards alone. Using a debit card too can help you gain rewards and cashback in their offers. Several online and retail outlets offer cashback offers for every purchase made on the debit card. The points can be redeemed at any time to either purchase products from an online catalog of the bank or to earn shopping vouchers from various banks. Disadvantages of debit card. No credit allowed. A debit card is linked to your bank account. There is no possibility of making any transaction on credit. All transactions and withdrawals are limited to the balance available in your account. Difficult to dispute fraudulent use. It is easier to fraudulently use your debit card in case someone steals the details of your card, especially the PIN and the CVV number. The chances of a fraudulent transactions are very high. It is difficult to dispute such transactions with the bank. Additional fees on ATM withdrawals. Every bank offers you a limited number of free ATM transactions and other financial transactions per month at the branches of other banks too. Once you exceed the limit of free withdrawals, non-financial transactions, fees are levied banks. Once you exceed the limit of free withdrawals, non-financial transactions, fees are levied. Thank you.